Let's get straight to the management of Transport Corporation of India. Mr. Vineet Agarwal, the MD, is joining us on the show now. Vineet, hi, thank you so much for making time and speaking with us. Could you talk to us about how the demand trends are panning out? Because earlier we were talking about a lot of global headwinds. Is that expected to impact numbers in FY24 as well? When do you see recovery?
Hi, thanks for having me over. The global impact is always going to be felt on the Indian market. We are not as decoupled as we were in the past. So clearly, the export market has been affected. The first month was a bit weak as well, and it will have its implications throughout the year. However, the domestic market remains quite robust. So we are quite confident that 10 to 15% kind of guidance that we have been projecting will continue for this year as well. And in the domestic side, government infrastructure spend is quite robust. We are seeing the development of a lot of roads, multimodal ports, and warehouses, etc., which means construction equipment is moving. The items that you require for this construction, whether it is steel, cement, etc., are also moving. So and then there is also a little bit of an uptrend on the consumption side. So both of these factors augur quite well for the domestic side, domestic sector this year. Notwithstanding, also the auto sector has been doing reasonably well. As we saw with the chip shortage getting lesser in the last year, it had a very solid growth. We believe that this will also continue this year.
Okay, can you give us a sense as to whether or not you've been able to offset the impact of fuel prices?
Yes, well, so fuel prices were quite benign over the whole year. So in that sense, it was quite okay. We were able to pass on wherever it was needed. On the shipping side, we did see the bunker prices go up in the last quarter, and we were able to offset portion of it, but we could not do the whole thing. So you did see in Q4 a little impact on our shipping margins. But overall, with fuel prices being stable, it has definitely helped the sector.
What does this do to your margins given the fact that the fuel prices have been benign for you? Can we see the margins head back to that 14-15% level soon?
Well, last year was an exceptional year with the international shipping rates being really, really high. As we know there's a container shortage going on. And essentially, we did capitalize on that and sent our ships that were typically used for domestic shipping to international waters like neighboring countries like Jebel Ali, etc. We did, it was opportunistic. That is not there this year in FY23. So we did lose out a little bit of that. I do not expect that to happen in FY24. The domestic market is stronger for us. So we would continue to be here. So I think we are now at a more reasonable margin structure than what we were last year.
Okay, so that's the take coming in, Vineet. But just wanted to understand, what's the product mix likely to shape up going forward? Because you're tilting towards a higher LTL mix, which is expected to have better margins. Could you talk to us about how the overall product mix, revenue mix is likely to shape up?
Yes, certainly. That's on the freight business where we do two types of movement, which is full truckload and less than truckload. Less than truckload has started to move up for us. We're seeing that corporates are sending more cargo, which is higher frequency than larger parcels at one go itself. So instead of sending 10 tons, you're sending maybe 5 tons 2 times. So that is a good development. Also, there are also corporates who are sending the 10 tons along with the 5 tons. So if you're able to offer this basket of services, we definitely get better margins as well as better traction with the customers. And we have a hub network of more than 25 locations across the country and more than 1,000 offices across India that we're able to capitalize on this trend.
Okay, give us an outlook then as to how whether or not you're seeing volume-led recovery in freight and the SCM business.
Yes, in the freight business, we did see a volume-based as well improvement as well as a value improvement. In the supply chain business, there was increase in volumes as well because we did a lot of automotive movement. In fact, we moved almost 1,800 trains last year of 2-wheelers, 3-wheelers, 4-wheelers, and even tractors. There itself, we saw a total volume plus value growth of almost 27% in our supply chain business. So I think that volume should continue for this year as well.
And I just wanted to get a sense from you because you recently launched a study with IIM Supply Chain Sustainability Lab as well. Could you talk to us about what is this about? What could be the impact findings that you're expecting from this?
So it's not a study. We launched the Supply Chain Sustainability Lab with IIM Bangalore. The idea around that is to see how we can start looking at green supply chains. We all know that the ESG goals for a lot of companies have become very, very active, and they're trying to see how they can reduce their carbon emission. So clearly, one of the ways is to change your modal mix, go from road to rail to sea and other modes. But more importantly, what are the other areas that companies can adopt to have a greener supply chain? And here we've collaborated with IIM Bangalore to do a number of research studies on an ongoing basis. And one of the first things that we've come out with is a GHG, a greenhouse gas emission calculator. Apart from that, we're doing decarbonization studies, as well as corporates coming to us and asking us to do studies around how to reduce their carbon emissions. So it's a very, very exciting field, and it's something that the industry, the entire industry will definitely benefit.
Okay, appreciate your time. Thank you so much for joining in and giving us a view on how business is shaping up. That's the management telling us that they're confident about that 10 to 15% revenue growth in FY24. They expect demand sluggishness could continue slightly, but the domestic market is looking robust. 1490 is where the stock is at.